Hello and welcome to Pro Trader Strategies market commentary for Wednesday, May the 12th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from the economic and geopolitical environments and how that impacts the overall market analysis. Well, I do the same stuff in these daily market commentaries for you guys, but I layer on top of it option strategies I find to implement into my portfolio. Please remember, though, that past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on. It is kind of a pretty busy day, not necessarily in terms of economic data, but we had Fauci talking, we had a bunch of Fed governors speaking, and I think Powell's supposed to speak tomorrow. So a lot of things going on, a lot of levers and pulleys in the market. Moving and shaking. But let's get on with the economic data. We got the NFIB, which is the National Federation of Independent Businesses. Now, it's a small business index. And why is that important? Because the small business really drives the American economy, to be quite honest. It is about 90% of all of our economy. So those guys are super important. And right now, it is super important to support your small business guys. All right, so anyway, that number came in at 90.9. So it looks like people are supporting the small business owner. That is a great thing moving forward. As a matter of fact, I talked to a friend of mine who has a sushi place down here in Arizona, and he actually said that he has been knocking it out of the park. Keep in mind, these guys are closing the indoor seating. It's all drive up. Sushi is one of those things where people will have more of a tendency to take that home rather than buying a full meal or something like that at a local restaurant. But having said that, he said that margins are great right now because he doesn't have the staffing and people are buying a lot of sushi. Anyway, that number came in, like I said, at 90.9, expected to be 86.7, so really good number there. We got CPI, which is Consumer Price Index, that came in at negative 0.8, expected to be a negative 0.7, and then core CPI coming in at negative 0.4, expected to be a negative 0.2. Something to note about that core CPI number, obviously it strips out food and energy, but one thing to note is that is the lowest number or the lowest reading we've seen since the 50s. All right. Then, like I said, Harker Quarles and somebody else was speaking today as well. I can't really remember who it was, but a lot of Fed governors speaking today and Fauci. All right. So let's talk about the markets in crude oil. Crude oil is moving higher by $1.37. Why? Well, Saudi Arabia said they were going to cut production by about 1 million barrels. That probably is going to see a couple of other countries in the Middle East start to cut back on a little bit of production, try and get some support up into the 30s. I'm sure they're hoping, because that's where some people are going to start seeing some break evens right now in these 20s. Everybody is losing money. As a matter of fact, Chesapeake Bay, which is huge in the fracking, and they are looking to file for bankruptcy. So one of the first shoes to drop there. Also, Boeing talking about a little bit of sidebar from this, but Boeing talking about one of the major airline carriers is about ready to file for bankruptcy as well. So we're going to start seeing some of those things coming out where people are filing for bankruptcy. Oil, Chesapeake Bay is on the precipice, and there, when you're in fracking, that break even is upwards of $50 a barrel. So a long way away from those guys being able to come back from that. All right, gold's moving higher by about $14 today. I talked about this yesterday. We broke below that 1700 mark, and I think that the bulls are going to try and defend that area. Something to note here, we do have a bit of a flag going on. I probably could draw just so you can see it a little bit better here, but we have a flagging going on in gold futures, and usually this is considered a bear flag, but I think that it could easily break that and pop to the upside. So we've got a line here, and then if we draw a line, hopefully I can do it there. That's kind of like your flag anywhere breaking above or below that, it's going to really want to pop. I think that we might see a break to the upside on gold futures. I think that's where the most likely turn of events is going to go, just because the weakening of the dollar and the Fed talking about coming in and actually buying corporate bonds as well now. All right, so we've got bond futures trying to struggle back to get above that 180 handle. I talked about it. Anytime we get below that 180 handle, we're starting to see some strength come into the market and support that. We have been below it for a couple of days now, but line in the sand as well. You know, we're talking about drawing a line there, and then that's not a very good one. I'll draw this line up there. So that is kind of your range that we're going to probably see for the foreseeable future. Great opportunity to sell maybe some iron condors around this. I haven't implemented anything around the bonds or the treasuries, but that is something to keep an eye on there. You know, I am in the gold, so I'm going to stick with that one. It's actually looking pretty good in gold there for my GLD trade. As a matter of fact, it's gotten a little bit better already as we speak, and probably close to being able to cover that one. All right, VIX. VIX is coming off a little bit. That's where we're seeing strength in the equities. As you can see, the Dow Jones Industrial Average is up on the day, a little bit off of the highs. We were also in negative territory, so a bit of a big swing going on as people were kind of shoring up some positions ahead of all of these Fed governors talking, and Fauci as well, speaking in, on camera because of quarantine, but he was talking today as well. And then we also have the NASDAQ up about 28 points on the day, pushing up against this Fibonacci, which is lined up with 93.25, let's call it. So just below that, we did test that earlier this morning. It does look like we're getting a little bit toppy here as the market's starting to slow down on momentum. It wouldn't be a bad thing to see a little bit of a correction, some profit taking going on here, because there are some stocks out there, like I've talked about, that are in the NASDAQ. That is that building out the home theater, or the coronavirus stocks, if you will, the pandemic stocks that I've talked about. Facebook not doing as well as I thought it would do, but Microsoft, EA Sports, Activision, those are doing very well. As a matter of fact, EA Sports is eyeing up another 52-week high. We just got one about a week ago, traded up to 120. And if you guys remember, I put on a risk reversal, which is on, or it's not a risk reversal, a ratio call spread, basically doing a long call spread, selling an extra call against that in order to create a credit spread. So if you have stock on, well, and you didn't want to cover your stock necessarily or just sell covered calls against it, maybe we're worried about the upside happening, but you wanted to take advantage of it if that does happen. So the thesis is, and I'll talk about that. You know what? I'll wait till we get over there to that, because it's looking pretty good right now. So let's move along. The E-mini S&Ps is off by about a quarter right now. It is pretty much unchanged as we click unchanged here. And I've talked about this. Once we've gotten above this Fibonacci, or this point of control right around 2,900, let's call it, it's going to want to bounce between 3,000 and 2,900, I think, build out a bit of a volume node. We've got a lot of time spent right here at the 2,900 level that hasn't really traded, like exchanged hands, as much as it has up there at that 3,000 level. But something to note, we're above the 9-day moving average, which is short-term bullishness, but we've got a lot of overhead resistance with a Fibonacci and the 200-day. They're all lining up with the point of controls, though, and those usually have a magnet type effect. And so I think that because those two points of control are separated right now, it's going to want to build up some volume in between there as the market kind of shakes it out right in and around where we are now. Now here we go with the E-mini S&Ps. You can see overnight inventory was very long for the most part. And then coming into today, try to give them a bit of a flush out and some of that economic data, like the CPI being Core CPI being the lowest level we've seen since 1950. I think it was actually 1959. But that caused a little bit of a sell-off there in the E-mini S&Ps. I don't think that there's going to be a whole lot of real directional moves today. You can see it's an inside day after yesterday's pretty big range. Well, we're trading in and around that area right now, and it feels like that's what the market wants to do, is kind of just trade sideways today. All right, Electronic Arts, EA Sports, if you will, they have done very well. Now, you guys remember I was getting into this trade a little while back, and I bought this at 89 back here in March-ish, if you will. As a matter of fact, I'll just pull up exactly the date that I did this in. So EA, we bought those. I sold some puts in there at the 89 level, and obviously got those put to me. And so I got long some EAs at 89, and I ended up selling or letting this ride out. I collected a credit for those puts, put that stock to me. Now we've gotten this nice rally, and this was all based on, this is a stock that's going to do well. Well, once we got above this like 112 area on 414, which is when I was talking about trying to capture some of the upside in here, right around here, 414. I wanted to capture the upside. One of the things I was worried about is we were up against the Fibonacci, the 52-week high being right here around 13 or so. That would, if we got above that, I was expecting to get a bit more of a pop. Some of those shorts might have to cover. We might get a little bit more of a rally. So we ended up doing buying the, May, they expire on Friday, May 115 calls, and then for every one of those I sold 2 of the 120 calls, and the idea there was to cover some of my position if it got up to that 120 level, which I didn't expect it to get up there this soon, and if we would be able to take advantage of that move happening with the 115 120 call spread. I can cover some of my longs there and take advantage of the market move. So all of those things have worked out pretty good. You can see here close to the highs, trading at around 119. So I'm really close to covering this long call spread of mine, and that would just be kind of legging out of this position a little bit there, where I would just buy the call spread or get out of the call spread. That's 115 to 120, one by one, all right, and leave on those short calls, maybe have some of these called away from me there. So something I'm keeping an eye on here. If we trade up near 120, I might be looking to do that today, but don't have a working order in there at this point. I'm trying to really figure out what I want to do, if I want to just cover the whole spread or let some of these get called away from me at 120. All right, and with Walmart, I did Walmart with a call calendar, if you guys remember, and the idea is that we were going in there and we were going to do this spread, and I did it in the May and the June, and I sold the May 125 calls and bought the 125 calls in the June, and that was on the 3rd of April, so right around here. We've gotten that move here in Walmart. It did go like in my face for a little bit, but you can see starting to settle down right in and around that 125 handle. So today I covered the short calls in this Walmart trade. So I covered the May 125 calls that I was short, was able to get out of those for $1.45. I had to pay a debit of $1.45, but I originally sold those for $2.36. All in all, I did that whole strategy for a debit of $1.79. So I still have on the long calls in the June for the 125 calls, and those are looking pretty good as well. It was pretty much close to a scratch on those, but I think we'll see this. We usually say that it's third time through here, so that was what I was looking at with this line. As a matter of fact, I'll just do a straight line. This line right there, third time through, I expect it to want to pop and go up to about 128 or something like that. So cover that little gap that we got here. So I decided to cover the short calls in the May, despite the fact that they do expire on Friday. I wanted to get out of that in case we get a bit of a pop happening to cover that gap. So legged out of that one, still long the June 125 calls, like I said. And that's all I've done so far today, keeping an eye on the overall markets, but haven't added anything at this point in time. The only thing I'm really looking to do is pare back some of my position in some of these other ones, free up some margin going forward so I can find some other opportunities out there. All right, so that's all I've got for you guys. Please take a moment to go over this disclaimer. We are an educational company. We are not here to give you guys investment advice, and past performance, like I said, of any trading system or methodology is not necessarily indicative of future results. All right, if you can't take that, take it easy.